Welcome, listeners. You're listening to Deeds in the Desert, the place where real estate investors tune in for the latest news and available investments at Ignite Funding. If you're on the hunt for a low-effort, passive income stream, then turn up that volume and pull out the hammock as we get ready to feed you your weekly dose of real estate investing insights.
Welcome back to another episode of Deeds in the Desert. My name is Madison Beaupre, and today in the studio we have Pat Vassar, Director of Underwriting. And we're just going to do a quick episode on why borrowers and investors choose Ignite Funding. Why would you want to work with us? Why wouldn't you pick a bank? How do we compete with them? So most bankable borrowers will have multiple sources of financing, capital at their disposal, including family, friends, banks, and alternative lending options, kind of like Ignite Funding. But if banks are known to have the most affordable capital out there, why would borrowers need so many financing options? Well, today we're going to talk about a few of the main reasons why borrowers come to Ignite Funding to fund their products. And helping me today with that is Pat. Hi, Pat.
Hi, thank you.
So let's talk about the first reason why borrowers would choose us.
Well, first of all, let's kind of dispel the misconception of the only reason people come to us is because they can't get bank financing. Mm-hmm. That is just flat out wrong.
Wrong.
Yeah, most of our borrowers, if not all of our borrowers, have normal bank debt financing in their portfolio. However, bank financing doesn't work all the time. And one of the biggest reasons it doesn't work is because it just doesn't fit inside the predetermined arbitrary boxes that banks have established. You know, banks are federally regulated and have to follow a kind of a one-size-fits-all approach. Because of these very restrictive mandates, borrowers tend to be handcuffed when dealing with the banks. And so, you know, that's one of the reasons they don't go to them. Most borrowers typically start out by borrowing from friends and family to get their first deal going. Mm-hmm. Then they move on to small regional banks. They slowly work their way up through those banks and then eventually outgrow the small banks and have to move into bigger national banks. And there tends to be a segment of the real estate market, kind of the $2 to $15 million range, let's say, that is kind of underserved. They're just too big for small banks and not big enough for big banks. And so it's kind of this void that hard money lenders tend to fill. And because of that void, you know, we are able to lend a higher interest rate because there isn't as many potential lending solutions for our borrowers.
Yeah, and banks don't lend on all phases of real estate, do they?
Absolutely. Yeah, they get to kind of pick and choose which ones they want to get involved with. There are many headaches in which borrowers have to deal with when working with the banks, but most of the time they will get involved with the construction financing because they are able to dole out money without having the necessary reserves to fulfill the future funding requirements.
And sometimes they're usually a little slower to approve borrowers, right? That's what I've heard.
All the time. Yeah. They're notorious for being slow. Some of the brain damage the borrower has to go through just isn't worth it if it's a short-term loan. Take, for example, and this is a hypothetical, obviously, and one in which is exaggerated, but you'll get the idea of what I'm trying to get across. If you have a loan that is going to be outstanding for one day, so a very short-term loan, and the bank's offering you 2% financing, and the hard money lender is offering you 15% financing. 2 to 15, obviously you want to take the 2 all the time, but if it's only outstanding for a day, what's the downside there? It's such a short period of time. It is a lot more money, but you'll be able to not have to deal with the delays associated with banks and have a predictable closing schedule.
Let's move on to our second point on why borrowers would choose Ignite Funding.
I kind of alluded to it previously, but it's that predictable closing times. When banks get ready to fund loans, it gets passed off to a different underwriter or a different department for different approvals. And when that happens, there tends to be additional information that is needed. And it is a situation where borrowers tend to get locked up and they don't necessarily know for sure when the bank's going to be ready to go. So they'll either need to have pre-existing relationships with senior leadership or just kind of cross their fingers and hope things get done according to their timelines. Because of that unpredictableness, Ignite Funding thrives on giving borrowers set closing dates that we will always adhere to.
Mm-hmm. It helps that we do everything in-house too. We originate, fund, we service, right?
Absolutely.
So sticking with one company to get the entire job done from A to Z definitely cuts down on closing times.
Absolutely.
So let's move on to the third reason why someone would choose us.
It is the short-term aspect of the loans. Given the scenario where we're charging quite a bit more than banks, people will still tend to use us because they don't want to deal with the headaches banks require to go through the due diligence underwriting and dealing with multiple individuals, as well as not knowing the closing time associated with it. Because of that short-term nature of our financing, most of which is under 2 years, almost all of which is under 2 years, they aren't going to be holding this asset for generations. Because of that, they're willing to pay a little bit higher interest rate to get rid of all of those other nuances, the lack of predictability when it comes time to finance, and the higher headache that is caused by multiple people touching the file and multiple departments having to get approvals.
And higher interest rates means higher interest rates for our investors, or no?
Well, when we charge the borrower more, we definitely pass that on to the investors. We tend to keep about 2%, all of which is disclosed to investors prior to them going on a loan. But on average, it's just under 2%. When we charge more to the borrower, the investors get more. As interest rates continue to creep up, our interest rates will continue to creep up. And when doing so, our investors are definitely going to start to earn more money.
And speaking of investors, what do you think is one of the main reasons why investors choose us?
The biggest reason is just the passive aspect associated with trustee investment. Because we are an all-inclusive A to Z, cradle to grave organization, it enables the investor a one-stop shop to get educated on, to learn about, and to decide which investments they want to be involved with, all of which, after they've signed some documents, they sit back and wait. And they wait until the 15th of each month and collect their interest payment and wait until the loan is paid off either early or at maturity, at which point the investor then gets to decide if they want to reinvest or go take their money elsewhere. A couple of the biggest reasons investors would choose us is because they get to dictate which investments to go on. All of these are short-term loans, and they rely on us to underwrite most of the deals. They'll still look at them and determine which ones they want to go into, but they know that we're not just throwing the noodle against the wall and seeing what sticks. All of these have been vetted internally, and investors are only seeing the cream of the crop.
Thank you so much for joining me on today's episode and talking a little bit about why borrowers and investors choose Ignite. To our listeners, if you are interested in adding passive double-digit returns collateralized by real property to your portfolio, give us a call at 702-761-0000 or text the word investments to 844-552-7022 to stay up to date on all available investment opportunities. And thank you again for listening to another episode of Deeds in the Desert. We'll see you next week.
Thanks for joining us this week on Deeds in the Desert, where short-term investments meet long-term investors. We hope you enjoyed the content so much that you share it with all your friends. Who doesn't like learning about passive fixed income, right? Still hungry for more education? Visit our website at ignitefunding.com. Or if you're ready to take the leap and start investing, give us a call at 702-761-0000 and schedule a free investor consultation.